Hi guys and welcome. On this video we're going to discuss personal loans and more specifically how we can get a personal loan quickly and easily. Now why would anybody want to get a personal loan could be different due to many different reasons. Perhaps you've set your eyes on that new car model that just came out of the dealership, or there might be a big personal celebration that's about to take place. Whatever it is, a personal loan can be a fast and efficient way to help you realize your dreams sooner. Allow us to share with you some of the secrets of getting one of these loans. So, what is a personal loan? A personal loan is an installment loan with a fixed rate, and generally, you don't need a collateral or security to get one. The principal usually ranges from $500 to $100,000, and most lenders would require a short payment period. It comes with a set of monthly payments. You pay the same amount every month, and a date when you need to fully pay the loan. Lenders will use their own computations and look at your credit worthiness to set your interest rate. People use a personal loan for different purposes. The most common of them are for consolidating other debts, such as multiple credit cards, or to pay for a one-time, big-time expense like a funeral. In the recent past, lenders would simply check your credit score, examine your tax returns, and get your employment details to be able to decide whether to give you a loan or not. They will use the same factors to determine how much interest they will charge. Lately, however, a newer breed of lenders has invaded that market. They are more modern, aggressive, and technology-driven. They use non-traditional factors to make their lending decisions. Now they will even look at your SAT scores and your social media accounts. Significantly, it's quite easier now to get a personal loan than during the time when the players were just credit unions and traditional conservative banks. Personal loans vary in size, the principal amount, and the term, the length of repayment period. Believe it or not, there are personal loans that extend to years. In contrast, there are loans, such as payday loans, that become due in just a couple of weeks after you have borrowed the money. The catch is, if you pay back a payday loan within that small window of time, the lender won't charge you interest. But of course, they might charge you something different, like an origination fee, for them to make some money. But be careful of some personal loans. Some of them will start accruing interest at once. This would include some installment loans, so check them very carefully. The amount of your monthly payment will depend on the size of your loan and the lender's interest rate for you. Some lenders will get you away with a slightly lowered interest rate when you sign for a longer term. There is a way for you to tell whether it's better to choose the lower interest rate with a long term or the higher interest with a shorter period. Just find a good personal loan calculator and punch in the numbers. Many of them are available online for free. So, what is the key point for all of this? Avoid borrowing anything beyond what you are capable of paying back. Now, let's see who should apply for a personal loan. Here's the thing, a personal loan is not for everybody. For starters, it is not the cheapest form of financing. Secondly, the requirements are quite stiff, such that people with credit problems would normally not qualify for it. But it really is an excellent option for certain borrowers, such as people who need money really fast. Yes, you might have some home equity, but in the case of a sudden need, you will not be able to tap it fast enough. It would take weeks for the bank to appraise your property, process your home equity loan, go through approval, and finally fund it. If there's a once-in-a-lifetime investment opportunity that you need to grab right away, a personal loan could be the solution. And think about this, you can always use your home equity loan to pay off your personal loan once you are no longer under the time pressure. People who tied up their money in retirement accounts would probably decline as well. You might have some money in your retirement fund, but unless you're old enough, touching it means paying a penalty. A personal loan could be a lot cheaper as a source of funds. But here's the catch. When you take money from your IRA or 401k too early, the IRS will consider the money as your income. Therefore, you might have to pay around 10 to 39.5% income tax right away. And did we mention there's a 10% penalty that comes with it? Look at this. If you're in the 25% tax bracket, you will need to withdraw $15,000 just to net $10,000. That's a very, very steep price to pay. Another type of borrower who aren't able to get a loan are people who don't own homes or have enough home equity. Some people have really good credit and a healthy income, but they do not own a house. Personal loans allow these good folks to get some funds pretty fast when they need them. The last group is people who prefer a loan with a fixed interest rate. You are dead right to say that credit cards come with a low fixed rate, but that's only for a limited time because they skyrocket after a while. That's why they call them teasers. If you want a true blue fixed rate loan, a personal loan is the real thing. Now, in order to arrange the things, we've divided the process of getting a personal loan in 4 easy steps. The first thing you should do is to understand your credit score. Let's jump right in. The better your credit score is, the higher your chance for qualifying for a personal loan and a lower interest rate. Check out our loan pre-qualification calculator. So, evaluate your creditworthiness by checking your credit score. It's free. In general, credit scores fall into these categories: 720 and higher, excellent; 690 to 719, good; 630 to 689, fair or average; 300 to 629, bad. Here's the trick. Do what you can to build up your credit score before you apply for a loan. The biggest factors that pull your credit score up or down are on-time payments and the total credit you've used relative to your total credit limit. So get your free credit report and dispute any errors it may have. If you fall in the bad credit category, you should look for personal loans for bad credit borrowers. The second and maybe most important step is to shop around and shortlist lenders. Do not for a moment believe that all loans are expensive. As soon as it occurs to you that you need a loan, you should already be thinking about how to get the lowest interest rate available to you. In many cases, there will be enough time for you to do ample research and to shop around for offers. The great thing is that even borrowers with below average credit would be able to get reasonably affordable loans from online lenders and peer-to-peer lending sites. However, if you can survive without having to obtain a payday loan or an installment loan, you're much better off. One thing is for sure. To get a traditional lender to lend you money, you need to have decent credit. If you're getting a personal loan from a bank or a credit union, you may be able to swing for a lower rate if you go by way of a secured loan. Of course, you'll have to offer some form of security or collateral to back up your loan. It could be your savings account, the title to your car, or your home equity. The third step in the process is to compare the lenders and select your preferred offer. How do you go about comparing lenders? Here's a list of items that can help you narrow down a personal loan lender that is appropriate for your need. Number 1, loan amount. Let's face it, because lenders have different criteria, different lenders may grant you different amounts of loans. And just because one lender offers you more money than the rest doesn't mean you should grab it without thinking. What you need to remember is that it will cost you more to borrow money and spend what you've already set aside. If you can combine your savings with the amount you've borrowed to finance your purchase or expense, that just may be your best option. Number 2, the second thing to check is fees and charges. The fee and charge structure are different for each lender in terms of their composition and amount. Needless to say, some will charge more than the others. Be aware of what prospective lenders will be charging and how much. Compare them and go for the lender that will give you the lowest fees in total. Number 3, loan terms and conditions are another important aspect. The loan terms and conditions are also not standard among lenders. They tend to vary significantly. Do they charge a fixed rate or is there an option for a variable rate? Is there a fixed repayment term? Is there an early payment penalty? Find out every little detail of the loan you are planning to take out. The last thing to check is the lender legitimacy. Truth be told, you might encounter some fly-by-night scammers posing as online brokers or lenders. Always investigate whether the entity you'll be dealing with is legitimate. Do some research and read online reviews. Some people might report of encountering problems or bad experiences with that specific lender. Now, you've almost reached your milestone and it's time to apply. It would be a good practice to read the terms of the loan offers and get answers to whatever questions you may have. Specifically, watch out for the following. Prepayment penalties. Most online lenders will allow you to pay off the loan early without charging you a prepayment penalty or exit fee, so make sure the lender spells this out in the terms. Automatic withdrawals. Some lenders will require that your bank automatically withdraws your payment from your checking account. In this case, it would be a good idea to set up a low balance alert with your bank to avoid overdrawing your account and paying overdraft charges. APR. You should know the total interest and charges you'll have to pay. Make sure that the lender gives full disclosure of the total cost of your loan, including any origination fees and any other charges they figured into the annual percentage rate. On top of these items, look out for other consumer-friendly features. The lender reports your payments to credit bureaus. If the lender makes on-time reports of your payments to credit reporting agencies, it will boost your credit score. Tip: all lenders at NerdWallet reviews do so. Flexible payment features. There are lenders who will let you choose your payment due date or forgive an occasional late fee and even allow you to miss a payment in case of hardship. Direct payment to your creditors. Some lenders will take the trouble of remitting the borrowed funds directly to your creditors. This is a convenient service for borrowers who are consolidating debt. Once the lender selection process is over, you'll need to provide the following documents to formally apply for the loan: identification, such as a passport, driver's license, state ID, or social security card; verification of address; utility bills or a copy of a lease; and proof of income: W-2 forms, payslips, bank statements, or tax returns. There are a few things you can do to improve your chances of getting an approval. Do these things before you apply for a personal loan. First, determine the type of personal loan you need. When people talk about personal loans, they usually refer to the unsecured, closed-end installment loans. Strictly speaking, auto loans, mortgages, payday loans, and credit cards also fall into this category, as opposed to business loans. Make sure you are clear as to what type of loan you are applying for. Quite simply, if a lender determines that your credit is not good enough for you to get prime interest rates or even qualify for a loan altogether, they may instead offer a secured loan. Should you be okay to put up your vehicle or home as collateral, a title loan, mortgage, or home equity loan may be an option to get better rates. Just remember that in the case of a secured personal loan, you could lose your property for it if, for whatever reason, you are unable to pay the loan back. Anyway, taking a personal loan in order to invest the money can be a risky step. Another thing you should remember is to know your financial boundaries. If you are seriously pursuing a loan, you should already be mindful of your credit history and current score. The bank would normally tell you the range of credit scores that would merit their approval. Have foresight and request a copy of your history and score weeks before you actually lodge in an application. Check your credit history for accuracy, and make sure you have enough time to rectify any errors in your history. Most lenders will give weight to your past use of credit. If your report has mistakes, you may end up with a lower score, therefore hurting your chances of a loan approval. Consider your financial limitations if you want to borrow money. Apply for a personal loan based on how much you can afford to repay on a monthly basis. Creating a checklist is also something that can help you during the process. Using the information from the bank, it is helpful to create a checklist of the necessary documents you need for the loan application. Remember that it may take time to get the necessary documents from their sources: creditors, employers, other persons, or entities. Incomplete applications usually don't pass approval. Of course, you do have to do anything you can to improve your credit score. The good news is, your credit score is not permanent. You can take steps to improve your credit score before you apply for a personal loan. This is especially important when your credit score is about to breach the next classification bracket. Excellent credit is 760 plus, good credit 700 plus, and fair credit 640 plus. Let's say your credit score is pushing 770. That's already in the excellent bracket. Increasing it to 780 won't really make a difference. But if your credit score is around 680, heaving it over to the 700 mark would increase your chances of getting approval. What's it all about? You tend to save a lot of money when you qualify for lower interest rates. You can improve your credit score by these simple steps. Always pay your bills on time and reduce your debt to available credit ratio. If you have a record of late payment or any other negative item on your history, waiting for 6 months while making sure you update all your payments will help. If you've developed a good relationship with a lender that reported the negative item, you can try writing them a nicely worded request to blot out the negative item. Since you don't want to get into a scam, you should stick to reputable online lenders. Shopping for a personal loan lender online is the best way to go. It will save you time and money and save you from all the hassle of running around offices and counters. And since online lenders have lower overheads, they can offer lower rates that will be a huge benefit to you. But first, a warning. There are plenty of shady online lenders out there. They will guarantee loan approval, but will try to skim you dry with advance fees, without giving you a loan. Be sure that your online lender is a state-licensed financial institution that has no past or pending lawsuits. Check with the Better Business Bureau to see their profile and find out their rating. Don't forget to ask questions. If you've made the choice for the loan package you want, contact the bank directly to know firsthand what are the requirements for the loan eligibility. It might need a face-to-face meeting with a bank representative to discuss the materials, documents, and timeliness of the approval process. Banks have different requirements, so it's important to know what they are so you can prepare adequately. This is important. Don't apply for a personal loan in many banks all at the same time. You might be thinking that the more applications you send, the bigger your chances are of getting an approval from 2 or more banks. But it's not really a wise move. Doing this will reflect during your credit investigation, and banks may conclude that you are financially desperate, which is not good at all. You are actually increasing your likelihood of getting declined. The last thing we want to advise is to pay attention to your debt-to-income ratio. The trick is to apply for as little amounts as possible and be certain to report your actual income. Never underreport or overstate. Loan officers sometimes overlook a borderline credit score or one or two occasional credit indiscretions if your income is high in relation to the amount you want to borrow. Unless the bank requires otherwise, provide them with your pre-tax earnings and be sure to include all sources of income. When the lender does not prohibit it, you may include your spouse's income as well. What we really want to say is do not fall into the temptation of inflating your income or lying on a loan application. If a lender does not ask for a particular document to prove your income level, there is a tendency to get a bit creative. Just make sure that for whatever you indicate about your income, you can easily justify and provide evidence. If you lie about your income, you open yourself to criminal charges, especially if you are unable to pay back the loan that you obtained with a bit of deception involved. And that's it for now. On our website, you can find more posts as well as calculators and other financial tools. Do you have better ways to get a personal loan? We would love to know your thoughts, so feel free to share them in the comments below. I hope you enjoyed this, and don't forget to subscribe to our channel on YouTube to get more free financial education videos.